Well, good morning, everybody, and thank you for joining me for the insights, at least my take on the current grain markets. And as you can see, I've titled my presentation, The Tale of Volatility. Yes, and there's an old saying in the grain business, short crops have a long tail. What do we mean by that? Well, we expect large price swings in a short crop year, and it takes time to resolve that shortage. Not all that unlike this year. Obviously, a black swan event in terms of geopolitical events. So certainly prices have come down a bit from the recent highs, but we're kind of on this tail of volatility. So let's take a look, get started here. Three primary things, I think, as far as explaining the current situation with our grain markets. Number one, what I'm calling geopolitical issues. Number two, tighter global inventories. And number three, dry US breadbasket and wet down under. So starting off, number one, geopolitical issues. Certainly, supply chain uncertainty and unprecedented price and input volatility, driven primarily by Russia and Ukraine. Obviously, big players in the global grain market. Let's take a look first, though, at extreme price movements we've seen in both wheat and corn futures. What we have here are marketing year high, low, and averages. The averages denoted by these black cross sections on each bar. And as you can see, if we look back just in recent history, 2013 through 19, average range in wheat futures of about $1.50. Obviously, that has changed here in the recent years. Primarily, Russia invades Ukraine February 2022. A threat to global wheat supplies obviously drove prices up to $14 in Chicago futures. We have since come down from that level, but in looking at the overall price movements and averages, 2007, our former benchmark, if you will, for high volatility and prices, we had a range of about $7.60. 2021, that range set a new high of $8.17. So certainly some extreme price movements in our wheat futures. But as we look at the current year, 2022, we're actually on course for setting the highest average futures price for the marketing year thus far. So that's the wheat scenario. Taking a similar look at Chicago corn futures, annual high, low average price, we can see corn futures have really been about on that same roller coaster. 2013 to 19, average of just over $1 a bushel. Turn the calendar over to 2020, had a trade resolution with China, and that thankfully triggered some record exports, not just for 2021, but also for 21-22. So corn markets, strong exports the last couple of years. And as you will see, we've come into a, well, I'll call it a production shortfall for corn this year, but similar take for 2022. Price ranges, we've exceeded those in recent years. And the most current year, we're looking again at an all-time high average price for Chicago corn futures. So we talk about the impact of Russia and Ukraine on the global grain markets. Starting out with wheat, we look at the top 10 global wheat producers, at least based on the most recent 5-year average production. We see China and the European Union really kind of neck and neck in terms of total production. India come a long way, haven't they? Third place in production. And in fourth, we see Russia. Behind that, the United States, Canada, and then Ukraine. What does this really represent, though, in terms of percentages of our global wheat trade? Well, why do we care about what's happening in Russia and Ukraine? Obviously, they account for 20% of global wheat production between the two. And Ukraine is really the breadbasket, if you will, of Russia. More importantly, from a global food standpoint, These countries account for about a third of our global wheat exports. So very big implications anytime you threaten wheat supplies coming out of the Black Sea. So let's see where we're at in terms of change in global wheat production. This is our projected 2022 numbers, I should say USDA projections, and that change from the 5-year average. Highlight Russia and Ukraine first. We see Russia increasing about 13,000 metric ton. Ukraine down about 7,500. Those are the numbers. Percentage-wise, plus and minus about 20%. But let's go down the list here. Who else do we have on this particular list? Argentina, otherwise known as a fire seller in the market, meaning they typically come out, undersell the market, and in fact, they have provided a good conduit for those countries that normally got grain from Russia and Ukraine. But this year, severe drought. They're going to be down. What about Australia? Up about 50%, currently forecasting a record wheat crop on top of last year's record. The question with Australia, as we will discuss, record quantity, but what about quality? Going down the list, the United States down about 10% relative to the 5-year average. As we all know, we'll talk about this too, La Nina impacted the Midwest with extremely dry conditions, and that cut into our production. So that's global wheat production. What about the corn situation? Top global corn producers. Well, we can see right away who leads that charge, and that would be the United States. In terms of Russia and Ukraine, they account for about 4% of global corn production. So really not the same influence as wheat, but certainly we miss any corn exports from Ukraine. So going down the list too, important to highlight Brazil, rapid growth in that country, and we'll talk about the percentage growth here in just a minute, becoming a formidable challenger, if you will, in the global corn market. Of course, China, and then the United States. Go back 100 years, you still hear the old song, corn is king. We account for about a third of global corn production. So really, the United States, in most respects, sets the tone for our global corn market. In terms of changes in corn production year to year versus the 5-year average, again, Russia up about 1,500 metric tons, up 10%. Ukraine down a little bit, about 5%. Argentina, we just had USDA numbers come out last week. They haven't really changed the corn numbers. Given the drought down there, they're saying still up about 2,500 metric ton. Remains a question. Brazil up about 30,000 metric tons relative to their 5-year average. Again, they continue to grow. In fact, you go back, they're showing a 40% growth in acreage and production since 2017. Phenomenal growth. Again, a major competitor and tend to balance out Northern Hemisphere production problems. European Union, epic drought in that country, cut their corn production nearly 20%, but in terms of metric tons, 22,000. South Africa up 2,000 metric tons. And the United States down 11,000 metric tons acreage. And again, we trimmed our yields back a little bit given the dry conditions in the Midwest. So that's our changes in global production for corn and wheat. Item number 2, worthy of discussion. I call it tighter global inventories. Wheat is in fact reversing a 7-year uptrend in stocks growth, and U.S. sets the tone for the corn market. Again, weather and acreage influences. Let's go through this. World wheat stocks. What we have here, the gold bars, you'll see the 0% over here if you can see my cursor. These show years where we add to global inventories and years where we take away. Along with that, we've got the tried and true stocks to use ratio, a better relative measure, if you will, of where stocks are relative to demand. So dialing in a little bit, global wheat stocks. We're seeing the lowest global wheat production since 2017. That is helping us reverse a 7-year uptrend. You'll see 2013 through 19, we were consistently adding to global wheat stocks. In fact, reached a record level throughout this time period. Given the past 3 years, we're reversing that 7-year uptrend. And in fact, global wheat stocks down 10% from the 2019 peak. Shift your attention, if you will, to the gray bar, and notice this pattern too as we move through the different markets. The stocks to use ratio, a good relative measure of use relative to available supplies. A low of 21% in 2007. Again, that was kind of our benchmark here prior to this year, to a record high of 40% in 2019. We have reversed that trend and projected to be 34% in 2022. Again, notice where that is relative to our benchmark tight years for that ratio. So what I'm saying in terms of global wheat stocks, tighter, but certainly not the tightest, okay? How about coarse grain stocks? Corn, rice, generally all feed grains, if you will. Same type of representation, change in stocks and stocks to use ratio. Global coarse stocks increased 6 straight years, and extended drawdown of the past 6 years has reversed that trend as well. But we'll notice a difference here when we get to the stocks to use. Production for coarse grains down 15% from our 2016 high. Now, the gray bar, global stocks to use. Low of 13% in 2010 to a record high of 28% in 2016. Since that time, we have come down, but rather than continue downward the last 2 years, we have actually stabilized at 23%. So world coarse grain stocks, again, tighter, but not the tightest. That's the global picture. What about our domestic crops? Well, let's take a look. U.S. wheat stocks and stocks to use from 1993. Notice the difference in the behavior of these lines, right? U.S. wheat stocks. This year, a dry U.S. breadbasket really impacted our lower Midwest breadbasket, if you will. In particular, 40% of our U.S. wheat crop tends to come from the hard red winter variety, and we recorded the smallest hard red winter crop in over 30 years this year. Soft white wheat, coming out of a drought year, actually were 4% above our 5-year average. So white wheat production, especially here in the Pacific Northwest, rebounded. Bottom line, 2022 U.S. wheat production, 93% of the 5-year average, 83% of the 10-year average. So down 7 and 17% respectively. What does that mean in terms of actual stocks? Well, you can see again, 2007-8, our prior benchmark year for price volatility. We have the tightest stocks since that year for U.S. wheat. Stocks to use, again, focusing on the gray line, if you will, down 25% from 2017, a peak of 56% stocks to use. I'd never seen those types of ratios before in terms of stocks to use. So for U.S. wheat, lowest stocks to use ratio since 2013, and I'm highlighting that with the dash bar. Certainly, relative to global wheat supplies, U.S. wheat stocks are indeed tight. What about the export sales? How are we doing for demand? Well, currently, U.S. wheat exports are lagging the average pace. By how much? Well, the yellow bar is exports to date as a percent of last year. The gray bar, exports as a percent of the 5-year average. Higher U.S. prices, primarily hard red winter, and a strong US dollar have tempered export demand. The bright side of this picture for us in the Pacific Northwest, white wheat exports are in fact relatively good, up 25% year to year. Talked about a strong US dollar. Well, US dollar strength has certainly hampered demand for grains. US dollar index, as shown on this particular chart, reached a 20-year high in 2022, seeing some relief here over the past month. And of course, as we all know, a strong US dollar makes our commodities less affordable in the hands of foreign buyers. But thankfully, the dollar has softened about 9% over the last month. So it may open up these export channels just a little bit based on that. So US corn and stocks to use. Let's take a look at that. A little different roadmap, if you will, than what we saw on wheat. Some of the highlights. Acreage for US corn down 5%. La Nina impacted that area, late plantings. And of course, input costs. Generally, the Midwest producer has an option of corn or soybeans, and they went with a less nutrient demanding crop, soybeans this year. As a result, 2022 US corn production, 70% of the 5-year average, 80% of the 10-year. So down 30% and down 20%, significant declines. In fact, the lowest corn stocks in the US for 10 years. How about stocks to use? Well, that particular ratio was nearly half of 2019 and challenging the 2011 low, which you'd have to go back to 1995 to go below that level. What set us up? Well, record level of exports, a renewed trade agreement with China. They came storming back for both corn and soybeans. Set us up for a tight year, and now we have declining production on top of that. Certainly, US corn stocks are tight. But remember, looking at projected inventories at the end of the year, that's dependent upon USDA forecasts for exports. And there's some question to exports when we talk about corn. Remember I showed the wheat down about 15%? Well, currently corn exports are down 50% from a year ago. Obviously a strong year last year. There's our 50%. But even relative to the 5-year average, we're down 35%. Again, higher US prices, good competition out of Argentina, Brazil, if you will, has kind of put the lid on our export picture for corn. So here we are, currently down about 50%, 35% from average. And the USDA so far is hanging tough, saying we're only going to be down 15%. Something to bear in mind if you are involved with corn markets. If we can resurrect our export picture, corn prices probably have a good opportunity to move higher from where they are. So item number 3, tale of volatility, dry bread basket and wet down under. Certainly, global market is under the influence of a strong weather pattern, also known as La Nina. Typically means a wet PNW. Anybody remember June up in this area this year? Record amounts of precipitation, dry in the Midwest. But what about the global influence too? Well, let's talk more about this. As far as a dry US bread basket, winter wheat crop, we already talked about that, coming up short, primarily in the Midwest, right? Well, we take crop condition ratings heading into the winter. We have 5 and 10-year averages. US crop currently off to a very rough start. Numbers? Well, US crop ratings at the worst levels in history, only 34% on a national scale, rated as good to excellent. So not only do we have a short crop last year, this next year's crop is not off to that good a start. Primarily Midwestern states, Kansas only showing a 21% good to excellent rating, but also issues in the PNW. especially Idaho, 37%. That's very rare for Idaho. We're usually up in that high 60s this time of year. However, we talk about moisture and the changing weather patterns. There's some opinions that say recent moisture has lowered the severe drought impact across the U.S., initially affecting about half the crop. They're now saying maybe down to about a third. But nonetheless, we need to keep our eye on winter wheat conditions moving forward. So that's a dry U.S. breadbasket. I mentioned wet down under. Well, when I say down under, in the grain world, we talk about Australia. Record precipitation, September through November. Look at that in this particular grain zone, if you will, for Australia. They had extreme late season rainfall in their key production zones. Anybody who's raised wheat knows what happens when you get heavy rains on a mature wheat crop, right? Also, massive flooding in an area they call the Murray-Darling Basin, a 420-mile drainage in eastern Australia. Now you think about that, that's about like going from here to Portland, Oregon, impacted by high flooding and high rainfalls. So certainly had an impact. Affected a large production zone and has impacted not only their crop quality, but impacted the condition of roads and railways. So they're currently working through that. They're getting the crop in, but it's going to be a question of quality. And just to highlight this production zone in Australia, let's take a little different look. They have a record crop on top of a record crop last year. The question about Australia this year, how much of this is going to be feed wheat? That's right. What about quality? You're looking at the map here, New South Wales, easily 25% of their wheat production on average, 16% in Victoria. South Australia, again, where the moisture is, that's where they produce the wheat. What can we say about this graphic? Well, record precipitation essentially impacted nearly half of Australian wheat production. As we like to say, rain ultimately makes grain, but quantity now becomes an issue of quality. And these late season rains likely cause some sprout damage, disease, AKA feed wheat. So record production, maybe not all that effective in terms of satisfying global wheat needs. And the other caveat, as most people know, Australia is a primary competitor for those of us in the PNW who grow white wheat. Things to keep in mind. So far, geopolitical issues, tighter global inventories, dry breadbasket, and wet down under. What about other considerations? Obviously, other things going on. Let's just touch on those. This thing they call the Black Sea Grain Initiative, that is the ability to keep grain exports flowing out of Russia and Ukraine, certainly in place, at least for the next 120 days, but tenuous. Transportation, La Nina, starved the Mississippi River barge system. They're running barges at half capacity and running twice as many of them, just trying to keep up with grain movement. Rail, we just averted a national rail strike, extremely important in light of what's going on with our US barge system. And ocean freight values, probably some better news there. Those values have come down from near record high levels. EPA and ethanol just announced last week. The quota came out, I believe, at 6%. The market was hoping for a little higher quota than that. The unfortunate side of that, industry is currently looking at about doubling our capacity over the next couple of years for ethanol production. Not a good combination between those two. Keep that on your radar. Mexico raised some concerns about GMO corn and how that's going to play into our US Mexico-Canadian trade agreement. And of course, as Jolly mentioned, farm input cost, fuel and fertilizer, certainly significant factors. So now, what about the price outlook? Where do we go from here? Well, let's take a look. What I have here is Chicago weekly wheat futures for the last 3 years, certainly reflecting the highs put in place during the initial panic over the Russian invasion of Ukraine. Unfortunately, since that time, we have essentially now erased all of that Russian invasion risk premium, back down around 750 in Chicago wheat. As mentioned, the Black Sea Grain Initiative, tenuous, but it is in place. Drawing broad support, and again, just based on what we've done here since October, support in Chicago about $7 a bushel, 30 to 50 cents below where we're at. The thing to remember moving forward, stocks are indeed tight, and given the global situation, there's still potential for wheat futures to factor in additional risk. And the large fund traders, as we call them, in Chicago, hold a huge short position in wheat futures. They're all leaning towards the sell side of the market. At some point, they could be panicked and have to buy that position back, which could trigger an uptick in our Chicago wheat futures. What about corn? Chicago weekly corn futures, same time period. Again, dialed in this high of 8.25, obviously slipped back in a big way. The difference here, corn has retraced some of that downfall. There's something else besides Russia and Ukraine driving corn futures. There we go. They've retraced about 50% of the decline of that Russian premium. Thing about corn, as we showed you, hopefully you remember the graphics, this market's being driven more by fundamentals of US and global supply. Things are tight, and the dry conditions in the Southern Hemisphere are coming into play. The nice thing about this for the wheat market, corn tends to serve as a shoulder of support to our wheat market. In terms of support in corn futures, you could roughly draw in $5.50 for near-term support, going back probably $5. So we do have some support under both of these markets. They've obviously come down from their highs. But I talked about the shoulder of support. Let's take a look at what that means in terms of our wheat market. We in the trade like to look at Chicago monthly wheat corn spread. And this is from 2013 to the current. Obviously, a lot of volatility, a lot of range, 50 cents essentially up to 250. You had an extreme of 335. Remember, this is the value of Chicago wheat over Chicago corn. Bottom line, wheat ultimately finds price support from corn as a feed grain. And in that context, wheat has lost $2.50 a bushel in premium over corn. In other words, we're getting down to an area where corn futures could provide support to wheat. So we are approaching that support as a feed grain relative to corn, believe it or not. There we go. Typically, that number comes in at about 70 cents. And that'd be a premium in Chicago wheat to corn. And as you can see, we're down around 85 cents. We're kind of in that neighborhood where we might find some support. So if corn rallies, more than likely it'll bring wheat up with it. How about cash prices? Well, regional white wheat cash prices. In terms of our markets, we always refer to Portland white wheat. That's our terminal market. What about the averages? Going back to June of 2010, and forward. 5-year average, just under $7. 2021, we averaged $10.50. And current year, $9.29. Currently, just checked the quotes here this morning, we're about $8.60 coast. So right in this area right here. What do, right? Well, if you're still carrying old crop wheat, some considerations. White wheat basis has strengthened. That's typically a good sign. It means there's something going on. In fact, we are selling U.S. white wheat on the export market. Currently about $1 over Chicago futures. you might consider locking that dollar over in, talking to your local co-op, and consider a basis fixed contract. Be aware there's no downside protection on that type of contract. Futures continue to go lower, you're just locked in at $1 over that price. How about, and the big thing here is if we get a rally in Chicago futures, whatever those futures prices go up to, you can add $1 to it. New crop considerations. I always like to recommend using futures to establish what's called a hedge to arrive contract. Again, talk to your local co-op or whoever handles your grain. Ask them about hedge to arrive contracts for 2023. Essentially, you're going to lock in September futures if they rally and establish basis later. So that's Portland white wheat. How about corn? Well, the averages. Let's lay those in here. 5-year average, 560. 2021, over $8. 2022, we've improved on that, about $8.45. But remember, a different marketing year for corn. We're only 4 or 5 months into that particular marketing year. Currently, about $8 coast. Old crop considerations. Essentially, you've just cut your corn. What are you going to do with it in terms of marketing? Well, $1.60 over Portland for a basis. That's a relatively strong basis. Kind of take our cue from that. There we go. About $1.60 over Chicago corn futures. The other thing different about corn relative to wheat, the corn futures market is in an inverse. Some call it backwardation. It just means the nearby futures are higher than the later months. Typically, and I say typically, that's an indicator to sell now. The market's telling you they want your corn. So as we saw, there are some bullish things going on with corn. Do you sell now? Well, if you haven't sold anything, maybe you want to lock a little bit in here. Obviously, we've come down off the highs. Certainly not a worst case scenario yet. Protect against that. But I would watch to see if we develop additional corn exports. That should lead to better corn prices. Other alternatives for corn? Basis fixed, just like wheat. Lock in the basis. Hope that the corn futures rally. Add to that price. Also, you can use a minimum price contract. Sell your cash. Keep your foot in the market by buying a call option. So, the tale of volatility. 2022-23 grain markets. Obviously, air of uncertainty remains. And we're currently on the tail of that volatility. Things have settled down a little bit. But as we have learned in marketing, never say never in terms of extremes for both prices and inputs. My advice now more than ever, it's important to determine your cost of production and equally important, protecting that number once you know what that is. Sustainability of your operations, cost of production should include some returns to profit, right? And please consider us, as those of us on the farm management team, as your farm management resource. Don't be bashful about picking up the phone or sending us an email. We are here to help. So that is all I have to share with you today on the 2022 grain markets. Thank you, and I would take any questions you might have.